And we are live. How you doing, friends? Somebody told me to put the microphone closer, so I'll give that a shot. Tell me if everything sounds okay. Hayseed says, "Hey, I made my first options trade. So many years trying to hit one out of the park. Finally, a light went off, so I'm glad to be in this group." That's fantastic. Yeah, and that's the problem with most people, and probably why this particular option service doesn't appeal to most people, because most people are looking for the get-rich-quick scheme. They'll tell you they're not, but they really are. They're not really into the slow grinding approach and just keep on accumulating more and more money and then compounding and compounding. They don't see the forest for the trees. And so I'm glad Mr. Hayseed has finally joined the better way. Alex says, the first of many. I signed up last week, yet to have placed my first trade. Oh, that's okay. Last week we probably didn't have too many trades, and we were coming into the end of our campaign, so we kind of sort of contracted a little bit and then took our trades off. So it's just your timing. There'll be plenty of opportunity. As a matter of fact, we have a whole range of new strategies that we're going to employ because of the change in the volatility regime, I should say, as we approach the U.S. elections. Now, that's part of what we're going to talk about today, but the first thing I wanted to talk about was our last campaign. Yesterday, I did a report on that campaign. I left out a critical piece of information that was brought to my attention by a friend, another YouTuber from Real P&L. His name is Carl Dom, and I would recommend his channel. He does great work. He said, "Hey, Ernie, you should show your equity curve from the time that you started to the time that you finished, and then also report on the volatility of that equity curve." And I said, "Man, that's a great idea." So he pointed out how I could do that in Thinkorswim. And so what I did was I created a little chart right from Thinkorswim so that I can report on that and show you what's going on. So let me see if I can find that. There it is. And I will bring that over here and then share that screen with you and show you. All right. Now I need to switch screens. Here we go. All right. So this is the equity curve since we started the service 2.5 months ago. We started with about $2,000. We've ended up with a little under $2,500, and so this is the equity all during that period. We did hit a higher mark, almost exactly $2,500 early or mid-September or mid-campaign number 3. And then we had a couple of trades in there. One in particular was a JP Morgan trade, and I guess JP Morgan got hit by this scandal of money laundering, and we just happened to be in that trade, so we had to exit that. So that created a little bit of a drawdown. Now, that was our biggest drawdown to date. Now, I did the calculation on that, and that drawdown as a percent of our capital and everything was only 4.6%. So that has been our largest drawdown to date in this period of time. Now, it's only been 2.5 months, so it's probably not enough data points to hang your hat on. But I think that as we go out forward and start and continue to build the account, that our the biggest drawdowns that we'll see probably won't exceed that amount, probably under 5% on average. There's no way for me to anticipate that, but I can tell you that with the type of income producing strategies that we're putting out there, that seems to be, and the way we're structuring things, I'd be surprised if we ever get much more than that. Anything can happen. Like, you could have a fat finger mistake, and I've had enough of a number of those, but that would be on me, not on the strategy. All right. So let's go back to the big head. And all right, so there's our performance. A nice smooth equity curve with very little volatility. Is that the way you want to trade? If that's the way you want to trade, then you should sign up for asymmetricadvisor.com/options. Now we're shooting to hit on average each month between 4 and 7% return on our total capital. So now you're talking about somewhere between, I don't know, 50% and 100% return per year. And I think that that's fully possible and scalable up to very large accounts. We're currently shifting our primary strategy that we started with and moving to another strategy that's going to take advantage of the change in volatility. I call it, we've crossed the chasm, the volatility regime line. And so we've gone from where credit spreads were good in declining volatility environments, and that's what we did in the first 2.5 months, and now they're starting to get a little iffy, and now volatility is continuing to drop. I don't know if it's going to drop much more, especially with the U.S. election coming up. But now, when volatility starts, if it were to be, if this were now the new low, and volatility was going to rise, credit spreads really aren't the best strategy for that. As a matter of fact, volatility works against you in a credit spread in that case. And so we're going to switch to calendars and diagonals. Diagonals being a type of calendar that just adds the additional parameter of not only having a spread between dates, but also having a spread between strike prices. So those two, and we can construct diagonals that look a lot like a credit spread, but they're much more effective in this low to high volatility scenario. And so that's what we're anticipating. We're anticipating, and this particular video is talking about how we're changing up our strategy a bit. It's still all the same strategy. We're into the collection of premium based on the direction or the nature of, or the current condition of volatility. So now that's all changing. We're at a relative low in volatility, even though it seems very high compared to historic looks. It's low compared to where we were in March when we had the pandemic crash. So that's where we're at. Now we're switching everything up, moving over to a slightly different strategy. We're also going to employ an income strategy as well that is also based on that same type of basic option structure, but it will it's going to take advantage of much longer dated options and just slight moves in that T0 line. The T0 line being that profit and loss line that you see so often in options P&L charts and graphs. And that's part of what we're doing here, and we're back testing that right now, and so I'll be able to report on that at the end of this campaign. I fully anticipate that will be sort of a regular feature in this service, as well as our discretionary trades that we do. That's going to be a very systematic trade, and I'm not saying that the other trades aren't necessarily systematic, but they're a little bit more discretionary. And we're still going to be, I think that longer term income producing thing will account for somewhere between 1% and 3% of our profit, our gains each month. And then the rest will add that extra 1 to 5%, 1 to 6%, whatever it is, on top of that. So we have this sort of diversity of strategies that will be at work for us. And then we will gauge that as we watch volatility and what it's doing. We are a slave to volatility. That's not true. As a matter of fact, we are the anti-fragile counterpart to volatility. Volatility is our friend. The more volatility, the better. Volatility. What is it? Nietzsche that said, if it does not kill you, it will make you stronger. Or was that Conan the Barbarian? I think both of them said it. Actually, that first Conan Barbarian movie, if you have a sharp mind and you actually watch it, it was really something to behold. Very deep. A lot of people don't know that. But anyways, that is the gist of what I wanted to talk about today. So let's see. Alex is saying it's weird how volatility can be such an important factor in trading, and the riddle of steel. Yes, the riddle of steel. Yes, and it's true. Volatility and time are the two primary factors. Well, there's really three dimensions to options. There's volatility, time, and then there's delta, or how bullish, the bullishness or bearishness of something. And with those three different dimensions, you can devise a strategy that will fit just about any kind of situation that might occur in the market. Now, the cool part is that when you devise these strategies, you can devise them in such a way that they can overlap, various changes from one kind of market to another, and that provides you a great deal of security, because you're not. I mean, you have this flexibility where you can make money whether price goes down, stays the same, or goes up, and you can mold your strategy to how much you think that you need to have that kind of variability. And that's the really cool part. And it can get a little esoteric, a little heady at sometimes, but what we do is we keep it super simple and only stay with just a couple of strategies. We don't go into all these multi-leg strategies. We try to keep everything as simple as possible so that our management of those trades, the adjustments that we have to make, where we make profit, where we get out before we get into any kind of bad situation, are very, very clear. There's no guessing. It's simple. It's obvious, and that's the way it should be. All right. Conan never said that. Yes, he did. I saw him say it. He did say there was a scene where I think someone's tried to poison him. Pretty sure he said that. I'll have to check now. See, now you're going to make me go and watch the movie. Thank God for Netflix and Prime. All right. We're all done here. Look, if you like this video, if you like what we're doing here, hit the like button. Smash the like button. Do that right now. Make sure you subscribe. Tell your friends. Join the service. You would not believe the value that you get from this service. Where else can you pay that kind of money and find a service where you're going to consistently make profits and learn how to do it in a relaxed armchair type of way? The answer is nowhere. And where are you going to get a service that is completely transparent, where I show my real P&L, I show my actual trades, and I share my actual brokerage statement with the members? So nothing hidden, nothing fake, everything right out in the open. That is how we run things here. All right. I want to thank everybody for showing up. That's all I've got time for. Now I got to go watch Conan the Barbarian. Have a great day. See you next video.